Nvidia's latest earnings result was stunning to say the least. Its revenue has almost doubled from the previous quarter, beating analyst expectations by about 21%, while their gross margin came in at 70%, a number that you would typically only see in software companies. As if that's not enough, they are also expecting next quarter's earnings to go up by another 20%. But with the stock running up over 200% since the start of this year and its PE ratio sitting at 113, the question is, are we now at the peak? Or can it go up even more? That's what we are going to find out in this video. We will be looking at what is driving the demand, is the demand sustainable, what are Nvidia's risks, and finally, I will share my thoughts on whether Nvidia is investable or not. Full disclosure, I currently don't own any Nvidia position, nor am I shorting the stock. This video is just me trying to research more into the company, so it's either a buy or sell call, yeah? Also, do join my Telegram group to ask or discuss any questions that you may have. With that being said, let's jump right in. To understand what's going on with Nvidia, look no further than the revenue breakdown. Here, you can see their data center revenue exploded upwards. This was hinted by Nvidia's CEO Jensen Huang in the previous earnings call, where he said that there was surging demand for its data center products, but I bet no one anticipated that the demand would be this strong. Then, in this quarter, the company's CFO said the same thing again. The company is seeing tremendous demand and that it has visibility into very strong orders into 2024. So, what is actually going on? One word, AI. Ever since ChatGPT was launched last year, everyone started realizing the huge potential of AI, which Nvidia's CEO famously describes as the iPhone moments of AI. All of a sudden, there was a huge explosion of AI tools coming out, whether it's in art, music, film, healthcare, work, coding, and so on. As a result, companies and even governments rush to buy as many chips as they can in order to develop their AI capabilities. China internet giants are ordering $5 billion worth of chips. Oracle is spending billions on chips this year. Saudi Arabia has bought at least 3,000 of Nvidia's chips. UAE has also bought thousands of chips for themselves. Even Elon Musk is hungry for those chips. So much so that there's a huge supply shortage in chips right now. But wait, what does AI have to do with all these chips? To put it simply, in order to train AI, you will need specialized chips called graphic processing units or GPU, which is the same kind of chip that was used to render beautiful looking graphics in games and also mine cryptos. This is because these GPU chips are optimized for taking in large amounts of data and process it quickly. Here's my favorite video comparing the differences between a CPU chip versus a GPU chip. To put it in perspective how intense AI training can be, ChatGPT was trained on 10,000 Nvidia GPUs, and this number will just continue to increase as its capabilities improve over time. And guess who is in the best position to provide these chips? Yup, Nvidia. According to a report back in 2022, Nvidia had a market share of 88% in the discrete GPUs versus AMD's 8%. And that brings us to this question. How sustainable is the share price? Quick pause. Here's a super good news. Weeboo's Fund Any Amount promo is now back. By just funding any amount and keeping the money there for 30 days, you get a total of 8 free stocks, all without doing any trading. So essentially, they are giving away free money. Each stock is worth anywhere from $3 all the way to $100, which means you will get up to 800 USD worth of free shares. Besides that, you will also get to enjoy awesome features with Weeboo, such as the $0 commission-free trades, auto-investment, which lets you easily dollar cost average into your favorite stocks. So, if you have not signed up to Weeboo yet, you can sign up using my link down below. With that being said, let's get back to the video. There's absolutely no question that Nvidia stock is trading at a premium right now. I wanted to find out what's Nvidia's intrinsic value. So I opened up my discounted cash flow calculator, which you guys can download for free. Link down below, yeah? I gave Nvidia a generous 50% growth rate for the next 10 years. And yet, I still arrived at an intrinsic value of just $200. Or in other words, Nvidia is trading at over 100% premium from its current stock price. But of course, just because a stock is overvalued doesn't mean that it will start crashing and boom tomorrow. As long as Nvidia continues to do well, the stock can continue to remain overvalued. Though the tech industry is moving quickly and many things can happen along the way. So let's look at some of the risks that Nvidia could be facing right now. 1. Is all this AI craze just a hype, or is there a real use case to it? Right now, there's a lot of investments going into AI. In just the first 6 months of 2023, there's already been $15 billion worth of investments being poured into generative AI. Interestingly, we had the same pattern back in the 1990s, where many venture capitalists were investing a ton of money into tech startups. And we all know what happened after that. The dot-com bubble popped and many tech startups failed. So will AI end up the same way? Recently, there's an article which suggests that demand for AI is now shrinking. For example, ChatGPT usage is now falling. Bing failed to gain market share despite their AI feature. Large companies are finding it hard to find actual ways of implementing AI and many more. However, AI is far from being dead. Quite the opposite. The number of developments in AI far outweighs the bad news that is going on. In China, the government is promoting the development of AI. France is trying to position itself as Europe's hub for AI, while the Delhi government is developing their own AI hub. Heck, even African tech startups are in the AI race. Basically, there's a global AI arms race going on. In it, Singapore is right there leading the charge. Yes, many companies will fail along the way, just like during the dot-com bubble. But personally, I believe that AI is here to stay for the long term. Next, will Nvidia's competitors catch up eventually? Yes. With the amount of demand for AI chips, companies who can develop AI chips will want to power in on the opportunity. For example, AMD and Intel are already working hard in developing their AI chips. But don't just look at these two. A big part of Nvidia's revenue comes from cloud service providers, companies like Microsoft, Google, and Amazon. And ironically, competition will also be coming from Nvidia's customers themselves. What these companies are doing right now is that they are making their own AI chips in order to reduce their reliance on Nvidia. Even Tesla is now designing their own chip for their supercomputer. So while Nvidia is selling a ton of chips to cloud service providers right now, this may start dropping where the CSP eventually starts using their own chips. Nvidia knows this. That's why they have been planning for this in a few ways. 1. Nvidia has launched their own cloud service in order to compete in that space. They do this via their own infrastructure and also by partnering with the same companies that they are competing against, such as Microsoft, Google, and Oracle. Besides that, they are also partnering with VMware to allow companies to build AI tools in it. Second, while Nvidia is well known for their chips, let's not forget that they also have software, which currently accounts for just 5% of their total revenue. Nvidia showed that enterprise software business has as big of an opportunity as the hardware business. For example, they have the Omniverse, which allows creators and designers to collaborate in a shared virtual space. Then, they have Hyperion 9, a platform for autonomous vehicles. This will consist of 14 cameras, 9 radars, 3 lidars, and 20 ultrasonic sensors to deliver autonomous and assisted driving features. There's also IZ, another autonomous platform, but for robotics, or the Drive Map, which allows Nvidia to recreate a digital twin of a 3D map in North America, Europe, and Asia by 2024. Combine this with the Drive Sim, which allows you to change weather conditions, lighting effects, or add objects, which will be used to train automotive vehicles without having to collect data like what Tesla has done in the past. Okay, here are my thoughts. Yes, it's true that Nvidia is super overvalued right now. And yes, Nvidia will lose their chip domination over time as more competitors come in. But if AI is here to stay, and if Nvidia can execute well on their software segments, it will present another huge growth opportunity for Nvidia. Though, I'm not in a hurry to buy Nvidia right now, as I believe that if I'm patient enough, the stock will eventually present a buying opportunity. But do let me know what you think. Is Nvidia a buy, or will you stay far away from this stock? Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.